Petty cash funds. Like most business owners, builders need ready cash around the office to pay for miscellaneous small expenses. But you might lose not only money, but also legal tax deductions if you use haphazard methods to keep track of this cash. Don't let small amounts of cash bleed out of your cash flow and build up to big losses over time. Keeping undocumented cash in a drawer or box invites pilfering. What you need is a well-documented and controlled office fund large enough to make incidental cash payments. The fund must be easy to use, yet give you all the accounting data you need to document the business expenses you pay out of it. You can't deduct from taxes what you can't document. Some people set up their petty cash fund by withholding money from a bank deposit. Others simply write a check payable to cash. I don't recommend either method. When you withhold cash income from bank deposits to set up and supply the fund, you make it impossible to use deposit records to account for sales. Recording all sales on deposit records is one of the best ways to clean up your record keeping. When you withhold sales dollars from the bank, you blur your profit picture and all your sales-related analyses. Books and records should be set up so that all entries can be traced to their origin, but you can't make accurate entries to the general ledger if you make payments from a fluctuating cash fund that's the product of money held back from deposits. If you write checks payable to cash whenever you need funds, here again, there's no accurate accounting entry to verify and balance the office cash fund. You can't code the check accurately because the amount is not immediately deductible. And since you don't know how the cash will be spent when you record the check in the check ledger, you can't distribute the amount of the check among your various expense accounts. A far better alternative to either of these solutions is to use the Impress system. The Impress system. An Impress system accurately controls the flow of cash payments and documents them fully on your check register. It also lets you record your deductible petty cash expenses in the general ledger. To begin, set up an account in the ledger as a separate petty cash fund. The balance of this ledger account doesn't change at all unless you change the amount you designate for the fund. The actual money in the Impress petty cash fund varies as money is spent. But confine the entries in the general ledger to the total amounts paid out of the fund and paid back to it from an expense account in the period of the entry. If you keep a $300 petty cash fund and you pay out $50 in expense 1 week, the actual fund balance is $250. The only time you make a general ledger entry is when you write a check from expenses to bring the fund back up to $300. The check is a reduction of cash for expenses, and this is recorded in the ledger as an increase to one or more expense accounts. So the general ledger doesn't adjust each and every payment you make from petty cash, only the amount expensed to reimburse the fund. Cashing the check brings the fund back up to $300. The Impress method has these advantages. It's easily maintained. Controls are built in. You balance the fund each time it's reimbursed. The fund is isolated from your checking accounts. The documents supporting the petty cash checks also verify the increases and decreases to petty cash. Entries to the general ledger don't require special effort. Cash shortages are cut down. The size and use of the fund. Good business practice dictates that you handle most business expenses by check. But realistically, every business must make some payments in cash. The amount of the fund depends on the requirements of your business. Petty cash payments shouldn't be large compared to those in the rest of the operation. The average payment is for a miscellaneous expense, not a major one. But the fund should be adequate to pay the following kinds of expenses. Expenses you can't pay by check. Expenses that are too small to justify a check. Incidental expenses that have been paid on your behalf and that you are paying back. Estimate the amount of cash you need to cover payments in these categories. But keep 2 points in mind when you decide on the size of your petty cash fund. Too high a petty cash balance leaves some of your cash idle indefinitely. This invites theft. Too low a balance means that you're likely to run out of funds often. That means you'll have to pay back the fund too frequently. Most operations need to keep at least $50 in petty cash. You may require much more, depending on the size of your payments, especially if creditors have placed you on a COD ordering status because of collection problems, or if you pay many of your bills in cash. But try to eliminate any such cash payments and reduce the size of your petty cash fund to less inflated amounts. Too much cash payment in an operation makes overall controls more difficult. To increase the balance of your cash fund, issue a check to the fund over the amount needed to pay it back. Then make the following entries in the general ledger. 1. Raise the fund balance by adding the amount of the increase to the old balance. 2. Reflect the increase in the account on which the check was drawn. To decrease the fund balance, let the fund dwindle below your intended balance, then replenish there. Petty cash fund expenses less the amount of the decrease. For example, reduce petty cash by $10 as follows, or you can deposit part of the fund into the general bank account, decreasing the fund by that amount. Make only one entry to the ledger, in this case, controlling petty cash. Controlling the flow of information for cash payments isn't difficult with an Impress fund. All payments from the fund are supported by a voucher or receipt. Figure 17%-1 shows a petty cash receipt that serves 4 purposes. 1. It's a signed document verifying that someone received cash from the fund. 2. It's a support document for accounting entries, coded for proper classification. 3. It's a document to support unreceipted expenses. 4. It's a uniform way to describe and identify payments from the fund. All funds taken from the cash box should be replaced by a completed receipt. Make one person responsible for the fund. That person should either write the receipts or see that the form is filled out before funds are removed. Make sure the person responsible knows that, at any time, the total of all cash plus the total of all petty cash receipts should equal the designated fund balance. Prepare a petty cash summary, as shown in figure 17%-2 at least once a month. Making up this summary is like balancing a bank account because you're accounting for the flow of cash in and out of the fund. If your petty cash volume is high, expect small unexplained discrepancies. The report also summarizes your accounting entries for each payment into the fund. Keep these reports in a small binder or attach them to the collected receipts and file them to support payback checks. The Impress Petty Cash Fund is a form of budgeting. You estimate the amount of the fund based on your expected cash payments for a specific period of time, 1 month. For example, if your actual cash expenses begin to exceed this estimate, look for a way to reduce the frequency or the amount of some of your cash payments. It might seem like an unimportant detail to develop such a rigid system for small expenses. But considering the level of federal taxes and their effect on your profits, it's time well invested. For example, let's say your monthly cash expenses add up to $85 and your effective overall tax rate is 32%. That means the value of having a system to document these expenses is $85 per month x 12 months equal to $1,020. Tax benefit equal to $326.40. The value of tracking expenses is $326.40. That's a significant enough number in itself. But there's more. Having the fund in place helps you to capture and document expenses you might miss without the fund. For example, you might spend a few dollars each week on legitimate business expenses. But without a fund for reimbursement, you tend to lose receipts or forget what they were for. The Impress Petty Cash Fund helps you claim all the deductions to which you are entitled.